What if I told you the secret to building lasting wealth isn't about picking the next hot stock or trying to time the market perfectly? It's not about being the smartest person in the room. The truth is, it's about a long-term, disciplined partnership with a team you can trust. Today, we'll explore how you can grow your wealth in the stock market, guided by the principles of Denver Wealth Management. At Denver Wealth Management, the conversation doesn't begin with a product or a stock ticker. It starts with you. The firm's founders believe that true wealth management is a comprehensive, goals-based process, not a series of one-off transactions. This philosophy was born out of a desire for a different way of doing business. One of the founders, Darren Snow, spent years at a large, well-known firm before making a powerful decision. He moved to the independent side of the business to create a platform that would better serve clients' goals and needs. The foundation of this new firm? An open platform, transparency of fees, and, most importantly, a commitment to a fiduciary responsibility. That word fiduciary means a financial advisor is legally obligated to place your interests above their own when making recommendations. This is more than a promise, it's a commitment. The Denver Wealth Management team works as a united front, combining the strengths of their senior portfolio manager who specializes in macroeconomic analysis and their senior wealth advisor who helps families make life-fulfilling financial planning decisions. So, what are the core principles that guide this approach? Let's start with the most powerful force in finance: compounding. Compounding is the magic of earning interest on interest. It's about letting your money work hard for you so you don't have to. The real power of this principle is revealed over time. Imagine two hypothetical savers, both investing $6,000 every year with a 7% return until age 67. One starts at 25, the other at 30. The saver who starts at 25 ends up with nearly 1.5 million. The one who waits just 5 years finishes with just over 1 million. That early saver contributed only $30,000 more in total, but because of the power of time, their final balance was nearly $500,000 larger. The next pillar is diversification. You've heard the saying, don't put all your eggs in one basket. This is more than a cliche. It's a core principle of risk management. By spreading your investments across different assets, like stocks, bonds, and cash, you can create a smoother journey. This not only reduces the impact of a downturn in any single area, but also provides a crucial psychological benefit. It helps you avoid the temptation to panic and make costly, emotional decisions. And that leads us to the final pillar: discipline. A disciplined approach is what turns a good plan into a great one. A key strategy is called dollar cost averaging, where you invest a fixed amount of money at regular intervals, no matter what the market is doing. This helps you avoid the nearly impossible task of trying to time the market. Studies have shown that investors with a well-defined financial plan tend to have better saving and investing habits. The plan becomes your roadmap, keeping you focused on your destination, not the daily bumps in the road. The market itself isn't the greatest threat to your financial success. You are. The biggest risk to an investor is their own psychology. These are what we call behavioral biases. Think about herd behavior, the fear of missing out, or FOMO. We saw this with the GameStop stock craze, where people followed the crowd without doing their research. Or overconfidence bias, the belief that you can outperform the market by picking the perfect stock. The dot-com bubble of the late 90s is a classic example, where over-optimism inflated stock prices beyond their worth. Then there's loss aversion. The pain of a loss felt much more intensely than the pleasure of a gain. These biases lead to common mistakes: trying to time the market, chasing past performance, or trading too much and too often, which eats away at returns through fees and taxes. The constant noise from daily financial news only amplifies these biases, triggering fear and greed. So, how do you navigate these challenges? This is where a partnership with a firm like Denver Wealth Management becomes invaluable. Their advisory model is designed to be the objective guide that helps you stay on track. DWM uses sophisticated tools like the Monte Carlo simulation to test your portfolio against thousands of long-term market scenarios. This gives you a quantitative basis for confidence and directly combats the human anxiety and emotional decision-making that can be so damaging. It's a way to prove that your plan is resilient across a range of potential futures. They also offer a wide array of comprehensive services that look at your entire financial life, not just your investments. This includes long-term tax planning, estate planning strategies, and insurance evaluations. They even have an innovative digital wealth advisor that blends the convenience and low cost of technology with the personalized advice of a real person. This synergistic approach, from comprehensive planning to objective guidance and advanced tools, transforms the complex world of finance into a structured and manageable journey. The journey of building wealth is a marathon, not a sprint. The evidence is clear. Success is a result of a long-term, disciplined strategy that leverages the power of compounding, diversification, and a well-defined financial plan. The greatest advantage you can have is a disciplined approach, insulated from the pitfalls of your own psychology. A partnership with a qualified financial advisor who operates under a fiduciary standard provides not only expert guidance, but also a crucial objective perspective to help you navigate the emotions of the market. A comprehensive wealth management approach, as exemplified by Denver Wealth Management, offers the tools and expertise to build a robust financial roadmap tailored to your unique goals. It's about building a solid foundation for financial success that gives you the freedom to focus on the rest of your life. If you found this video helpful, make sure to like, subscribe, and stay tuned for more tips and strategies to grow your financial knowledge.